there is so much of microfinance in the country. We still are seeing a lot of distress and lack of access. The interest rates go anywhere from 25 to 30%. You have a processing fee which goes from 8 to 10%. There's absolutely no agency when it comes to borrowing from microfinance institutions. So it's very easy for them to get misled and take one loan and then soon after take another loan to repay the first loan.
So why do you think, people who we work with don't actually get the kind of credit they actually need?
Again, it's a very good question given the fact that there is so much of microfinance in the country. We still are seeing a lot of distress and lack of access. Now, that's because of the way these institutions are structured and the way they design their credit programs. For many of us, this may come as news to many of us because the fact is that many of these institutions, even though they have good intent, they have a model which is similar to the Grameen model in Bangladesh, except that they have very high interest rates because they have high cost of borrowing, but they also have very high processing fees. And over the years, we've seen this get pretty from bad to worse. The interest rates go from anywhere from 25 to 30%. You have a processing fee which hovers from 8 to 10%. But above all of this, there's something more to all of this, and that is the fact that there's absolutely no agency when it comes to borrowing from microfinance institutions. So the communities cannot choose how much, when, for how long, and on what terms they want to borrow. So given that the communities are also semi-literate to illiterate, definitely financially illiterate, it's very easy for them to get misled and take one loan and then soon after take another loan to repay the first loan. And what we are seeing today is quite a grim situation where many of the loans which have been taken are, the communities are struggling to repay, and they're getting this vicious debt cycle. So that's one problem at one level. The other level is really, the other problem is that Nandan Nilekani once famously said that India is not only a poor country, it's also a data poor. So we don't have data for underwriting. So if you don't have data, then how do you underwrite? And all the traditional banks and NBFCs have not figured out alternate underwriting frameworks like we have done at Rangde. So clearly that compounds the problem even more, and therefore we are seeing a large community being left out. In fact, majority of Indians being left out from access to formal credit.